advancing advancing the world government, and because they know we're catching on to it, so they have to keep our interest by giving us a little red meat, and eventually they're going to, the people are going to catch on to the fact that, hey, those guys out there that they've been painting as loonies for so long, they've actually been, right on target, and it's the MSNBCs and the History channels that have been feeding us nonsense for years.
Well, I'm going to get Kurt Nimmo to write an article today, or Steve or Aaron, one of the writers, about how important it is to get Ron Paul to run for Speaker of the House. He's been there as long as Boehner. He's got a better record than Boehner. And positioning him for a run for the presidency, we need to push for Ron Paul to be the House leader, to be the Speaker, not Boehner.
God, absolutely. Boehner is he's a loon. This is the man who cries at the drop of a hat. He's the consummate actor and liar.
Well, it's important, and we've got another article. Several. Rand Paul promises to challenge GOP establishment. PrisonPlanet.com. Another key article. Ron Paul can beat Obama in 2012. That is so important for people to read this and see the points we've made and to get it out to everyone they know. I really do appreciate your call, Mike. Anything else? All right, Mike's gone. The Federal Reserve is set to make this announcement right now, but they're not making it, and that's normal. They usually make the decision behind closed doors. Yeah, it's not yet. So the Dow Jones is plunging right now ahead of the expectation that the Federal Reserve is going to announce quantitative easing, QE2, an acceleration of monetizing debt. They've been putting their toe in the water in the last 2 years, buying hundreds and hundreds of billions of dollars of U.S. Treasury notes. But now they're saying, according to the reports we've read, and there are Federal Reserve heads in different regional banks who are criticizing it, but they're not voting members, saying this is going to kill the dollar and kill the economy. But it doesn't matter. The media is saying the Tea Party's going to do it. The media says the stock market in the U.S. is plunging because of the Tea Party having victory. But when you actually read the financial publications, it's because of the Federal Reserve and the uncertainty about what's going to happen. But the fact that many of them do believe that they're about to announce the acceleration of quantitative easing, i.e. monetizing debt, devaluing the dollar. Here's Wall Street Journal. European stocks end lower ahead of Fed announcement. European stock markets ended on weaker note today as uncertainty surrounding the outcome of the latest meeting of the U.S. Federal Reserve overshadowed confidence about corporate earnings in the region. The Federal Open Market Committee is scheduled to announce its latest policy move after European markets closed. Investors remained uncertain how the Fed's policy would affect U.S. economic growth and financial markets. Markets largely took the expected Republican surge in the midterm elections in stride, choosing instead. Here it is. Let's go to the announcement.
That progress towards its policy objectives have been, quote, disappointingly slow, and it was taking this new step to promote a, quote, stronger pace of economic recovery and to help ensure that inflation over time is at levels consistent with its mandate. It also said that it will continue to reinvest proceeds from its maturing holdings of securities into new Treasury securities, longer-term Treasuries, at a rate of $250 billion to $300 billion over the same period. So the Fed total purchases here will be up to $900 billion over the next 8 months to help try to push interest rates even lower for mortgages, car loans, and business loans. The Fed said that currently the unemployment rate is elevated and measures of underlying inflation are somewhat low relative to levels that the committee judges to be consistent over the longer term, over the longer run with its dual mandate. Although the committee anticipates a gradual return to higher levels of resource utilization in the context of price stability, it again said that progress towards its objectives have been disappointingly slow. On interest rates, keeping it at 0 to a quarter for the Fed funds rate, the committee said that it continues to anticipate that economic conditions, including low rates of resource utilization, subdued inflation trends, and stable inflation expectations, are likely to warrant exceptionally low levels of the federal funds rate for an extended period. On its economic analysis, the FOMC said that information received since it met in September confirms that the pace of recovery in input and in employment continues to be slow. Household spending is increasing gradually, but remains constrained by high unemployment, modest income growth, lower housing wealth, and tight credit. Business spending on equipment and software is rising, though less rapidly than earlier in the year, while investment in non-residential structures continues to be weak. Employers remain reluctant to add to payrolls. Housing starts continue to be depressed. Longer-term inflation expectations have remained stable, but measures of underlying inflation have trended lower in recent quarters. The vote for this policy action today, 10-1, with the one dissenter, once again, Thomas Hoenig of the Kansas City Fed. Back to you.
Peter Barnes, thank you very much. There you go, everybody. $600 billion more being put into the U.S. financial system, courtesy of the Federal Reserve, $75 billion a month, up to 8 months. That brings the total amount of Fed money that has been announced since the Lehman Brothers crisis to more than $2.3 trillion. Jeff Given, you are the bond guy on the panel.
So, $75 billion. So it's going to be between 50 and 100 billion, and they can change that. But $75 billion a month over the next 8 months, and they give that directly to themselves. The banks will even clamp down more on lending. That spigot only goes to them, and so they get the money up front before it loses all the value, and they pass it on to you when it's devalued, and then you've got to pay them back in taxes. And the stock market began shooting back up. It's like, oh, our kings haven't announced what they're going to do, just showing how it's all a big casino in the sky, totally staged. It was plunging down, and then, oh, they came out and made the announcement that they were going to pump all this money in, and these big private central banks that are getting all this money, they go in and buy stocks. That's one of the big things they buy. So, oh, we're going to have 600 or more on top of all the other money. It's over 900 billion total in the next 8 months, pumped in, a lot of it into stocks. You're not going to be giving it in car loans or housing loans or business loans. No. And there is the chart right there. In fact, blow that chart up. What period is that over? But you can see today how it was plunging. It shows how rigged it is. And then it just automatically just zooms back up with the stock market up 21 points. Well, that's the Dow Jones Industrial right there. So unbelievable. Showing you how rigged these markets are. And imagine the insiders who started having their robo-computers dump stock right ahead of that to make others panic and start selling, and all the computer systems and smaller firms that are set to start selling when it plunges. And then they knew that minutes later the Fed would come out and announce what insiders wanted, and so it shoots right back up. I mean, that's like a few months ago with that 1,000-point drop in 10 minutes, and then it shoots right back up 900 points. I mean, you talk about corruption. We are seeing so much happen right now. I have the press release from the Federal Reserve. Get Kurt and Emma to post this ASAP on Infowars.com. Thank you. Good job, Jaron. We did skip that network break, but stations should be carrying this segment. We've got a regular local break coming up in T-minus 7 minutes, 15 seconds from now. I want to get into election fraud that is taking place as well, and all of your phone calls, people that are patiently holding right now. But that's the signal, and I would expect for this, who knows what they'll do in their manipulations the next few days, but I would expect for this to drive the dollar down big time and only intensify the global move by the Japanese, the Chinese, the European Union, the Russians, the Arabs, the Middle Easterners, the Latin Americans, everybody away from the dollar. Because this is just like in Mexico. You go back over the last 50 years, every decade or so, they make the announcement that they are going to devalue their currency, and people start dumping the currency. So now we're going to pay our bills with just made-up money. It's only a fraction of it backed up by tax money, and don't worry, they're going to squeeze that out of you. They're going to squeeze that out of me. And the worse the economy gets, the more they'll accelerate the debt. And then if somebody like Rand Paul or Ron Paul comes out and says, hey, we need to stop this, you're the one that caused the Depression. Well, wait, I'm not even in office yet. So there you have it, ladies and gentlemen. I'm going to go ahead and just read this press release right now. Then we'll get into your phone calls and election fraud in the next segment. This released by the Federal Reserve Board of Governors. They had a 10-to-1 vote on this. The Kansas City Fed head said no to it. Information received since the federal open market, and most of this is lies. They say inflation is low. We've already got incredible food going up, gas going up, gold going up, silver going up, all of this stuff going up. And there is some depressionary trends and deflationary trends in housing, but that's only in one bubble sector. Overall, they're trying to balance all this out and consolidate wealth. It's not working, but I'm sorry, I digress. For immediate release, information received since the Federal Open Market Committee met in September confirms the pace of recovery in output. Oh, there's a recovery. And they tell you that unemployment's less than 10%, too. They just lie. The pace of recovery in output and employment continues to be slow. Household spending is increasing gradually, but remains constrained by high unemployment, modest income growth, income's down, lower housing wealth, and tight credit, because you got all the money banks, but you won't give it out. Business spending on equipment and software is rising, though less rapidly than earlier in the year. Well, that's because they gave you a bigger tax credit on being able to buy equipment. You can write that off. Business spending on equipment and software is rising, though less rapidly than earlier in the year, while investment in non-residential structures continues to be weak. Well, it's weak in residential as well. Employers remain reluctant to add to payrolls. One grain of truth. Housing starts continue to be depressed. That's true. Longer-term inflation expectations have remained stable. That's a lie. But measures of underlying inflation have tended lower in recent quarters. Not true. Consistent with the statutory mandate, the committee seeks to foster maximum employment and price stability. Currently, the unemployment rate is elevated, and measures of underlying inflation are somewhat low. Relative to levels that the committee judges to be consistent over the long run with its dual mandate. Although the committee anticipates a gradual return to higher levels of resource utilization in a context of price stability. Oh, we got real price stability, folks. No, we don't. Progress towards its objectives have been disappointingly slow. To promote a stronger pace of recovery, you got to love this doublespeak, to promote a stronger pace of recovery, economic recovery, and to help, now this is the big issue right here, to promote a stronger pace of recovery and to help ensure that inflation over time is at levels consistent with its mandate, the committee decided today to expand its holdings of securities, i.e. U.S. Treasuries. The committee will maintain its existing policy of reinvesting principal payments from its security holdings. But they're not keeping their same policy. They're expanding it. Yeah, they've had quantitative easing. Now they're expanding it. In addition, the committee intends to purchase a further $600 billion of long-term Treasury securities by the end of the second quarter of 2011. That's the next 8 months. A pace of about $75 billion per month. The committee will regularly review the pace of its securities purchases and the overall size of the asset purchase program in light of incoming information. You watch, they're going to accelerate it now that they've made the announcement. It'll probably be $150 billion by the middle of next year per month. And will adjust the program, and will adjust the program as needed to best foster maximum employment and price stability. Oh, yeah, monetizing the debt will only make prices go up. That isn't price stability. The committee will maintain a target range for the federal funds rate of 0 to 1.4% and continues to anticipate that economic conditions. So having low interest rates will further devalue the dollar on top of monetization. That's a double whammy. Including low rates of resource utilization, subdued inflation trends, and stable inflation expectations, another lie, are likely to warrant exceptionally low levels for the federal funds rate for an expanded period. So they're telling you you're going to get low interest rates. Not if you're not a mega bank. Yeah, they get it for 0 or 0.1%. Many credit cards have gone above 30%. Rates are going up everywhere. Even if you got incredibly good credit, rates are going up. So all of this money and all of these interest rates being low, that only affects the ultra-rich and the insiders. I mean, it's just amazing to watch them do this. And right now, the stock market went way down 20 minutes ago. It shot back up 10 minutes ago. Now it's going back down. I mean, it's just total roller coaster. The committee will